Welcome to Cambridge House Live. I'm Vanessa Collette here at the Canadian Investor Conference, Vancouver. I'm joined by Mike Maloney. Mike, great to have you here with us today.
It's great to be here.
Mike, where do we stand today on the next economic meltdown?
Well, we're in a period where the markets have been going up for quite a while, and people are getting this feeling that everything's fine and that the powers that be took care of all the problems. And we are doing a tapering of quantitative easing in the United States. But the very fact that they had to do QE3, these are emergency measures, extreme emergency measures that are bigger than anything that has ever been done before. And they're still doing them. And now they're tapering, but they're tapering into weakness. The economy isn't doing that well. But gold and silver have been going down now for a few years, and the markets just have been going up, so people think that everything is going to be fine. There's always a price to be paid for any manipulation, though, and what the Fed has done is an extreme manipulation, and there will be unintended consequences.
So everyone thinks that the markets are doing well, like we were saying right before filming, it's the Easter Bunny economy. The truth is not really out there on the reality of where the market's.
Right, well, it all starts with a completely corrupt monetary system. Okay. Right now, everybody's on this income inequality kick, and most of that stems from this artificial monetary system based on credit. People are very confused. They call the stuff in their wallet money. They call the stuff in the bank account money, and it isn't. It's all debt-based. It's all owed back plus interest. Money is not debt, and people have to start learning the difference. The credit-based economy that we have warps the entire economy. The issuers and the first users of credit are rewarded greatly at the expense of the rest of the economy. When you create a new unit of currency, it steals its purchasing power from every other unit of currency in existence. So it's stealing from the real economy and blowing the financial sector into this huge bubble. And when you think about it, the financial sector doesn't produce anything. It doesn't create anything that you can live in or drive or eat. It creates a whole bunch of people that hand numbers back and forth, and they get rewarded so hugely that they get to ride around in limousines, but they consume, they eat, and they don't produce. So this corrupt monetary system that we have has created this warped economy. The world would be very different. There's a reason that gold and silver are called honest money. Governments can't create them at whim. Banks can't create them at whim. I don't know exactly where this is all going. I just know that when you've got all these countries where the debt levels are growing at a far greater rate than the GDP of the country, and then you put population demographics that are bad news in the future on top of that, there's a price to be paid, and I think that we are due for a currency crisis sometime in the future. Every 30 to 40 years, the world has a brand new monetary system. Well, we are overdue. We're 43 years on this monetary system. It's the most poorly designed monetary system of all of them, but there's no other monetary system standing waiting in the wings. When we went off the Bretton Woods monetary system, the dollar standard was just sort of the automatic default because the rest of the world was flooded with currency. The yuan and the euro, they aren't a large enough portion of the global economy to just sort of shift over to those. So the dollar standard is developing these stress cracks. I think that this next shift in monetary system will be very chaotic and very painful for a lot of people.
You were talking about governments being able to print money at their discretion. Now that we've seen, over $4 trillion now that's been printed?
Yeah.
Why aren't we seeing more inflation from that?
Well, a government can create units of currency, but they can't get us to necessarily borrow it and spend it.
Okay.
As they expand the currency supply, velocity has slowed because most of that currency that they've created is parked on banks' balance sheets to make the banks look like they're not bankrupt, and it helps prevent bank runs because they actually have some reserves to pay out if people want their currency. But ultimately, it doesn't end well. And then during the day, they can use this for the high-frequency trading they do and all that kind of stuff. So it's pumped the markets, but that's artificial. If they inflate, for some reason, inflation is not good unless they're inflating the stock market. Stocks are also prices. We've had enormous price inflation in the stock market. We haven't had in a large portion of the economy, but a lot of the everyday goods and services that the average person has to use to survive have gone up. They just don't count those in the CPI.
Right. So the actual inflation might be significantly higher than...
The actual cost of living for the average person is significantly higher, yes. Price inflation.
And when you talk about a meltdown or collapse, are you speaking of a loss of confidence in the currency mostly? Or what's your definition of the meltdown?
Well, I think there will be a loss of confidence one day. It's taking a long time to play out. I think in the short run that here in the West we are in for a deflationary period before any type of hyperinflation. I think that the popping of the Chinese real estate bubble or a big problem in Europe will cause people to run for the traditional safe havens, the U.S. Treasury and the dollar, and that they will be the short-term beneficiary of problems elsewhere. But ultimately, the dollar is just as much of a mirage as all the rest of the currencies. It's basically a corrupt system, a Ponzi scheme, where every unit of currency is borrowed into existence. It's due back, and if you pay back just the principal, all the currency vanishes, but you still owe the interest that was due when it was borrowed into existence. And that currency doesn't exist yet. You have to borrow that into existence as well and pay interest on that. It's a Ponzi scheme.
And moving over to gold, what's your forecast for gold right now?
You know, I really don't know if it's going to bottom. I think that it's probably going to bottom in the next couple of months here. Okay. So will silver, and then it'll start rising again. We have a lot of resistance to overcome to get past the $1,900 mark on gold and the $48 mark on silver. But the point is, it's on sale now. I think 5 years from now, looking back, people will be going, oh my God, I wish I had bought during that pullback. Right. This is a pullback that is required for a bull market to be healthy. You have to flush out the get-quick-rich people and the speculators for a bull market to be healthy. If you look at a chart of gold from the year 2000 to today, I mean, it was really a very, very perfect, almost a straight line. Markets don't work like that. There's supposed to be some flushing out, then it will continue. And when we reach a Dow gold ratio where gold's price is far greater than half the points on the Dow, probably a 1-to-1 ratio or bigger, at that point it might be over. The same thing with the gold real estate ratio. You have to look at, there's only so many different asset classes in society. And you can't have one stagnate while all the others go up. And that's what, gold was 850 in 1980. Everything else is 10 times higher than it was in 1980. Gold basically doubled its previous price, and then it's done a pullback. But to be in the same kind of bubble, it was in a bubble in 1980. But to be in that same kind of bubble, it would have to be $8,500, not $8,000, compared to everything else in society. Everything else is 10 times more expensive.
So is that your near-term target or long-term target?
I have, people that give prices for gold, they don't, I've done it, and I still do it because audiences want to know what the price target is. But the dollar is the mirage, and it goes up and down. And to always measure it, my price target is that one day gold will be equivalent to the Dow or double the Dow. and right now it's at about 1/13th, so that means that it'll outperform stocks by 26-fold. I don't have the gold real estate figures in my head at the moment, but it will outperform real estate also. Real estate's coming off the biggest bubble in history. In order for the value of the gold at the Treasury to equal the value of base money once again, like it did back when gold was revalued back in 1934, and when the free market and the will of the public revalued gold in the 1970s, and it peaked in 1980, the value of the gold at the Treasury was equal to or greater than all of the paper currency, the base money that was created. That process is happening again, but now it's requiring gold prices up at like $15,000 now.
Okay.
That sounds crazy when you say it. So, there's other people that have price targets of 8,000. But it doesn't matter what the price is. If we are in a deflation and the Dow drops to 3,000 points, but gold goes to 6,000, it'll buy 26 times more stocks than it does today. If we're in a big inflation and the Dow goes to 30,000 points, but gold goes to 60,000, it'll buy 26 times more shares of stock than it does today.
Right.
So all of that is relative, and I really hate giving price targets, but people seem to eat them up, so every once in a while I do.
Well, let's talk about Bitcoin a little bit. It's continued to gain traction as a currency. How do you evaluate Bitcoin as a store of wealth?
So far, I don't evaluate Bitcoin as a store of wealth, but I love the fact that the free markets are trying alternatives to government-mandated and manipulated currency systems. This is a wonderful thing. The world would be a far more prosperous place, a far more stable place, a place where you could predict what was going to happen in the future and have a greater chance, the probability of being right, if we had free market money. Bitcoin is an attempt at that, and I fully support any attempt at getting away from a small group of people trying to decide what the world economy is going to be, because the free market has all of the information. It's got the information of every transaction in society. When a small group of people like the FOMC committee at the Federal Reserve think that that they know better than the free market and they can decide where we're going to go and set interest rates, it warps and distorts the economy, and there's a price to be paid for that.
Right.
They have now trained an entire generation not to save. They've tried to goose the economy by keeping interest rates low, but that means that you can't buy a treasury bond and make gains ahead of inflation. You're actually losing purchasing power by owning a treasury bond. So therefore, they're punishing savers and training them to be either dangerous speculators, where a lot of their wealth can be lost very quickly, or to be borrowers and spenders. And so we're going to have an entire generation trying to retire on nothing, with the government, expecting the government to take care of them. And the problem is, they're the majority, so they're going to vote for the government to take more and more from the producers and give to the consumers. We are rewarding production and prosperity, and we were punishing production and prosperity, and we are rewarding consumption and being freeloaders, basically.
What's the advice that you have for investors and basically just people out there right now? I don't give advice.
I just tell people what I do, and what I do personally is I buy precious metals. I think that there's these rare moments in history where precious metals reassert themselves as money and sort of catch up with all the currency that has been created. I showed a chart yesterday with base money from 1918 to today, and then the value of gold at the Treasury rising to cover base money and then falling behind, and rising to cover base money and falling behind. Well, with the quantitative easing that we've had and then this pullback in gold, the spread between these two lines is the greatest that it's ever been in history. And it's most likely going to do what it's always done in the past. And I don't have the data to prove it, but my suspicion is that this is a process that's been going on all the way back to the first great inflation in Athens back in 407 BC.
Wow, it's a long time coming. Absolutely. Well, Mike, what are you working on these days? What's your next big project?
Well, we have a video series called The Hidden Secrets of Money on YouTube. And in the next few months, we should be releasing the next episode, which is in Rome, and deals with the Roman welfare state. And the same mistakes that dragged the Roman Empire down is what we are repeating today. And when inflation started to rage, they introduced wage and price controls. Well, we did that in the 70s, it didn't work. Diocletian didn't work. We're going to do that again someday in the future. You can expect that somewhere in the next 5 to 20 years, I don't know when it's going to happen, but we'll try it again. And then I've been, for several years now, really studying and spending a lot of time thinking about where does prosperity come from and what extinguishes it. And so the biggest thing that I've ever done, I think, will be the Hidden Secrets of Money episodes that are about prosperity.
So, well, Mike, thank you so much for joining us today. It was a real pleasure, and we look forward to having you back again soon.
Thank you.